Welcome everyone. Welcome to this episode of Market Wrap, and I have with me, of course, Mr. Pankaj Pandey. This has been a kind of a week, just making everybody was anticipating. I think we are getting used to some moves now, and while market did move a little bit, but not enough to kind of as per our expectations or something that kuch to hona chahiye market mein was the mahal. Now, Pankaj sir, lots of events happen. We will decode, try to understand everything from you, from discussing the RBI policy to monsoon phase to Q4 earnings. Let's begin with the overall outlook. What do you think about the markets right now, sir?
Hi, good evening, Vishu. See, this week we have relatively sort of underperformed our global peers. So Nifty is down about half a percentage, whereas a US index like Dow Jones is up 1.5%. But for us, the broader markets continue to do well. So we have seen a gain of about 1% again. Sectors like capital goods, PSU banks, energy have done well. Largely, if I sort of look at it, market has been consolidating in this range of say 24,500 to 25,100, and I think it's a very narrow consolidation, I would say, because market has been consolidating about 20-day moving average, which I think is a good thing. I mean, to put things into context, we have seen rally of about 15% from the lows. And from there on, we have corrected only 3 odd percent. So rally has been bigger and the correction has been shallower. And which is why I feel that markets are headed higher. So next leg of move is expected to be levels like say 25,500. But from a support perspective, we'll put 24,200 as support. And largely, the broader markets is doing a lot more better. Even if I sort of try to highlight, so for example, Nifty 500 to Nifty 100 has seen a strong rebound, and this is a sort of a breakout. And overall sense is that while there are sector rotation happening, but the overall broader market continues to do well. And I think since there is decent amount of sector rotation happening, so which is why I feel that the durability of this overall run in the broader market is here to stay. So for next week, yes, we have GDP data, we have RBI commentary, which will be the guiding factor. On top of it, FI flows is something we need to watch out for. And obviously, last but not the least, US always has something or the other going on, especially related to tariff. So we can't expect Mr. Trump to be silent. So I think volatility account of that is very much possible. But overall, I think corrections are lower or shallower, and I think rallies have been bigger. So which is why I feel that markets are headed higher.
Right, sir. The monsoons are here, sir. People have come out with their chais and pakoras. What do you think about the markets and what's expected this year?
Oh yes, I think monsoon has been a bit of a positive surprise because see in April IMD had come out with a forecast of normal above normal monsoon with a 105% of long period average, and they were expecting that monsoon will come early at somewhere about 27th of May. But to everyone's surprise, monsoon arrived actually nearly 8 days in advance. So on 24th May. And I think later the IMD has further revised the long period average to about 106. So I think monsoon has come early and is expected to be better than what was previously estimated. Good for us, but yes, there's some segment got impacted because power demand has sort of come down a bit because of the rains which we have seen. On top of it, I think overall sense is that it is good for the domestic rural economy and beneficiaries would include, say, farm equipment, consumer names in the durable side and staples as well. So yes, monsoon has come and I hope people are enjoying it as well.
Absolutely, sir. Sir, the Q4 earning season is officially over. What has been the highlight of the season?
So I'll talk about Nifty earnings, large cap earnings, Vishu. So against the market expectation of a mid-single digit kind of a growth, the earnings were more or less in line at about 3.2 odd percent. Top line was on a higher single digit at about 7.3 odd percent. Now we all know that banks have been sort of doing the heavy lifting of the earnings in the past few years. But this particular quarter, banks have taken a sort of a backseat, and largely because of the fact that they are witnessing pressure on the margins. And on top of it, we had fiasco at IndusInd Bank. So financial earnings were muted, at about negative 3.7% decline. And if I sort of strip out the IndusInd Bank also, the earnings are muted and with a growth of about 2.6 odd percent. Now, the point to highlight is that financials have not really been contributing much, and very likely so. Don't expect them to sort of contribute big in the next 3 to 6 months also, because the rate cut expectations are there. RBI is expected to sort of cut rates. And parallelly, the deposit repricing takes some bit of a time, which is why margin pressures are there, and which is getting reflected in the numbers for banks also. But good part is that if I exclude financials, the earning growth was 7 odd percent. So that way, no major issues there. Sectorally, I think telecom is doing well because the benefit of the price increase is visible in ARPU. So clearly, that is doing well. Capital goods is doing well because the exhibition cycle has done better. And metal is doing well because of the low base and also because of the fact that the aluminum prices have done better. Now, to put it to numbers, probably the Nifty EPS estimates for, say, FY27 might come down by 5% and odd. But I think it is also a function of the fact that some of the names like, say, BPCL and Britannia are getting excluded from Nifty, and you have new businesses like Zomato and financial services are coming in. Because these businesses are relatively less profitable, so that is also impacting. But our overall target of 27,000 for Nifty, we would want to sort of keep it there largely because India is a relatively far more better place in terms of earning, in terms of macros, and most of the other parameters.
Right, sir. In terms of small and mid caps, anything stood out? Which opportunities stand out according to you?
So yes, we have spoken a lot about large cap earnings. There are some mid caps and small caps earnings which look attractive to us, which have come out with good set of numbers. Even the opportunity pie is sort of large for them. Again, not necessarily in the same order, but one company would be Tech Wabag. Here our target price is 1900. Now company has come out with good set of numbers, 24% kind of a top line growth, 27% kind of a bottom line growth. So it is a good company in the water EPC space. Now this company has got an order book of about 13,000 odd crores. Then they are talking of a pipeline of say 35,000 odd crores in India and about closer to 40,000 crore in the Middle East, and with a win ratio of 25-30%. So overall sense is that they will be able to sort of sustain this growth rate. Their order book is somewhere about 13,000 odd crores, and which is why I feel that this is one of the few companies which can deliver double-digit kind of earning growth, turnover of 16 odd percent, and bottom line growth of 22%. So this is one company what we like. Elgi Equipment is another company on the capital goods side, makes compressor. This company also came out with a good set of numbers. It's an exporter. So there was a lot of fear that things might not be so good, but this company came out with good set of numbers, 15% kind of a turnover growth, and overall profit growth has been about 33 odd percent. Margins have expanded. Company is sort of doing well domestically and globally as well. I think there was one of the fears that because of the Chinese competition, the company was losing market share, or fear was that they would be losing market share. Now, company has developed machines, especially on the motor side, to match the competitors' price performance, and also of a similar quality. And which is why overall sense is that they'll do sort of better, and which we feel that this company is again going to deliver about 11% kind of a revenue growth and 18% kind of a bottom line growth. Again, it's a fairly good company from a stock portfolio perspective. The other one is JK Lakshmi Cement. I think this company was struggling with volume growth in the last few years. If you look at volume growth was about 3-4 odd percent, but our sense is that with capacity expansion taking shape, volume growth is expected to be about 8 odd percent. And last quarter, the numbers were good. The volume growth was 10% YOY higher, or 18 or 19% quarter on quarter, and price realization was also good because all your northern central regions did well. and which is why EBITDA per ton witnessed a good jump of nearly 47 odd percent to 976. So I think all in place, good volume growth plus better EBITDA per ton. We feel that companies should do well with a target price of 1,000. Lumax Auto Technology is another company which came out with pretty good set of numbers. I think this is one of the best companies in the auto ancillary universe. While top line has grown by 50 odd percent because of the acquisitions as well, but overall sense is that now this company is going to continue to sort of do well. 56% of their revenue usually comes from advanced plastic, which is front cockpit, side door panels, and all of it. From an OEM perspective, M&M is one of their biggest customers. We all know that M&M is already sort of doing well. And good part is that this company has guided for a fairly longish, consistent growth of nearly 20 odd percent. So they're expecting their revenues to jump from say 3,600 odd crores in FY25 to 11,000 odd crores by FY31. So that's a growth of nearly 20 odd percent. So this is another company which we feel is doing very well. And one more would be say HEG, because now this company is a play on the green steel transition, and is one of the key exporters. And they've got a capacity of about a lakh ton. Overall sense is that industry globally is putting 100 million tons of EAF capacity, and that itself will require graphite electrodes of nearly 2 lakh tons. And we've seen a shutdown of nearly 1.2 lakh ton kind of a capacity. So sense is that either the prices are headed higher, or overall things are going to become better for the industry. And this is not the only thing. Company is spending about 1,800 plus odd crores in lithium ion batteries. So they would be making anode, which is a critical raw material there. So while the demand is expected to be 1.5 lakh tons of anode, this company is putting up a capacity of about 20,000 odd. And there the margin profile and ROCs is again expected to be about 20 odd percent. So this is another company which we have liked. So not that this is the entire list of stocks what we have liked, but I think these are some of the companies which stand out compared to the larger universe of nearly 1,000 plus kind of a stock which people actively look at.
Right. And finally, for the last segment of the day, hidden gem of the week. Which will it be this time?
So rate cut is around the corner, Vishu. So I will want to recommend an interest rate sensitive stock. The stock is Indian Bank with a target price of 740. Now, typically PSU banks compared to private sector banks are less impacted by margin pressure because, say, for a bank like this, the proportion of external benchmark linked loan advances is about 40 odd percent. This number is higher for private banks. So that is one. The other thing is that Indian Bank has demonstrated a pretty sustained performance, be it in terms of business growth, asset quality, or operational metrics. This is one of the few banks where ROA is more than 1.3 odd percent for a decent period of time. Now, coming to specific, company, like I said, this bank has done a good set of numbers. Last year, they did about 10% kind of a growth in advances. Again, led by retail, agri, and MSME, which is 64% of their overall business. And I think deposit side also they have done well with a growth of 7 odd percent. Margins have declined by about 8 odd bips. And asset quality has not been an issue because their net NPA is about 0.19. So largely provided slippages have been also very controlled. And even next year also growth is expected to be sort of marginally higher. One more thing this bank has done is that they are not progressively uh, uh, growing their corporate book. In fact, they've shrunk their corporate book by about 10 to 12,000 odd crores, which is a low yielding business, and which is why they are able to protect sort of margins to a good extent. So I think, like I said, this is one of the few better banks within the entire PSU as a lot, and we feel that valuation-wise also it is quite comfortable, and we feel that we have seen decent amount of consolidation in PSUs in general and this particular stock. So I feel that Indian Bank is a right fit at current levels with a target price of 740 to be buy.
Absolutely. Well, that was it for today. Thank you so much, Pankaj sir, for your insights. And thank you so much, everyone, for watching. If you have any questions, please do put them down in the comments. Thank you.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.